In Pakistan, dealing with a multitude of challenges has become an increasingly uphill battle. The year 2023 saw a culmination of crises in politics, the economy, and security, going beyond what many had anticipated. The economic turmoil intensified to the point where even affluent urban residents are beginning to feel its effects. On MoneyCurve today, economist Haroon Sharif presents a snapshot of the tumultuous events that defined the challenging economic landscape of 2023.
We are at the end of year 2023. Looking back at the economy, really, it's kind of a mixed results of various interventions. Pakistan struggled to basically meet up with the IMF review requirements. Then later on, towards the end of the year, in the standby arrangement, the interim government managed to meet the prior actions. So the IMF program came back on track, which was a good news, and markets responded kind of positively to that. Second big event was that the uncertainty was reduced a bit with the announcement of election date, and that also had a positive impact, particularly in the stock market, which basically saw a bull's run. But if we look at, very carefully on Pakistan's economy, the macroeconomic management in 2023 improved a little bit, and Pakistan's major fault lines like current account deficit and budget deficit saw some positivity, but that positivity seems to be done by administrative measures, by cutting down imports. Also, there were administrative measures to curb down the holding or smuggling of currency that had a positive impact of Pakistani rupee against dollar. But it's a good news at least that government took the cognizance and tried to stabilize the macroeconomic situation, which is the fundamental foundation for future economic growth in Pakistan. Keeping in mind, but the highlight, I would say, where Pakistan continues to struggle is the inflation rate. This has really hit the consumption power of everyone, but particularly on the middle, lower middle and poor segments of society. Inflation remains, higher than 30% at an average in 2023, and that, basically put down changes in the lifestyles of all of us in Pakistan, and as compared to our peer, countries in South Asia, Pakistan struggled. Linking to the inflation, the interest rate remains very high. The policy rate is 22%. That resulted into much higher cost of doing business. But more, worrisome was that the high interest rate resulted in a very high financial cost of the government borrowing, because government continued to borrow from the commercial banks to meet up their budgetary deficits. Now, if one looks at, that's why I said the performance remained mixed. The large-scale manufacturing showed no significant expansion. Similarly, foreign direct investment remained under pressure. Rupee remained under pressure with some correction. The only couple of positive things which one sees in 2023, the announcements or commitments towards privatization, creation of, Special Investment Facilitation Council, pretty much led by the military establishment to coordinate, all government arms to facilitate investors. And the focus remained on government-to-government transactions, particularly with Gulf countries for projects in agriculture sector, in defense production, in technology, like the information technology linked, investments, and mining. These were the four, priority areas. Still, we are waiting to hear of some announcement that some, transaction has been closed or completed. We hope that SIFC can cut down the hurdles and does not really, engage into micromanagement of transactions that should be left to professionals. Similarly, major privatization of PIA was announced. That was a welcome step. However, there were signals that government might like to speed up the process, and these processes take time. The bigger decision is that PIA has been put for sale. So I would say some positives. Mostly the overall pressure on economy remains there. Recovery process is critical, but the projections of GDP growth in year 2024 remain between 2 to 3%, by various estimates of multilaterals and Central Bank of Pakistan. Now, this is a very low growth rate for a country like Pakistan, where a very large number of youth are entering the labor market every year, over between 2 to 3 million young boys and girls. For that, Pakistan needs almost 7% GDP growth, and the current structure of economy does not support it. If I look at 2024, a few things, the major challenges for the new government. Number one would be, I don't think Pakistan has many choices but to go to a medium term, 2 to 3 years extended fund facility of an IMF program, because our external financing gap remains significant. So negotiating a program which is based on homegrown reforms is challenge number one. Why homegrown reforms? Because we just cannot cut and paste an international recipe for stabilization. We need to take care of the poor segments of society. We need to increase our export returns. We need to basically focus on growth-oriented sectors. So we need to develop a homegrown reform program and negotiate with IMF. It all depends, that what kind of economic teams come into place. Inflationary pressures, huge challenge, because people are not only losing their jobs or livelihood opportunities, but the inflation will continue to beat. I hope the next year there are concrete measures to cut down government's borrowing. They do not print more notes, and they take governance measures to cut down the prices of essentials to give some relief to people. Now that is the second largest challenge I see. The third and the bigger challenge which Pakistan next year would see is that there is a very little envelope of development spending left. So Pakistani government will have to control expenditures on wasteful infrastructure, unnecessary road, overheads, bridges. So that is where I think the pressures will come, because politicians like these populist things, and where they can show some performance, but there isn't really much left in the budget after we pay the debt servicing. The similar pressures will come on subsidies, where government keeps on giving subsidies to unproductive sectors and to their constituents. One that needs to put a curb on that. Tax net will have to be expanded a bit, and one would need to do some reforms there. But at the end of the day, before I end, I think it's a mixed performance, but few good indicators, particularly some of the investment which follows the CPEC infrastructure, some deals which SIFC could materialize, and also one or two structural reforms which can give a message of change, that government is serious about changing the structure of economy, will lead to the market confidence, and I think Pakistan's potential could be harnessed. My closing message is that Pakistan for years has been selling our strategic location, where we are connected to many countries. But I think the fundamental question that we ask ourselves is that it is like, by closed borders, you cannot really harness that potential. We need to very carefully look at our foreign policy options if we want to reach out to the regional markets, because at this point in time, we have the proximity, but our policies basically make us almost a landlocked country. So we need to review some of these things and open up our mindsets and delegate things to the markets. That will give a feel of revival, and Pakistan will come out of this prolonged recession.